we'd like to thank you for tuning into the Jupiter Joe Money Show. I'm Kathy Green, in the studios each and every week with Joe Thomas.
That's right. Hi.
And Jenny Thomas.
Hi, Kathy.
We talk about retirement, your retirement, ways to help you get to retirement, ways that you understand your retirement, and of course, vehicles that you could use to get you there. Joe, tick tock, okay? Is your IRA a tax time bomb?
It is.
Right? We're on the edge of the abyss.
Yep.
Because it's interesting, and each and every week I too learn new things.
Mm-hmm.
So let's talk about your IRA, your 401k, and I guess the biggest culprit is taxes.
Yeah, people don't realize the biggest problem with a 401k and an IRA is the taxes you will pay, your spouse will pay, or your kids will pay. You will never get out of taxes from an IRA, a 401k, a 403b, I don't care what the letters are, what the numbers are, it all means the same thing. It's a tax-deferred vehicle. You're deferring tax to pay tax later when you need income. So if you don't do anything about it, you're going to pay tax.
So I like you're saying the 401k or an IRA is an IOU to the IRS.
It really is.
Very catchy. So, and we know people really, we know taxes, we have to pay them, but do we like it?
No.
No, and you had some questions too, did you not?
Yeah, I have a few questions. So what's the biggest mistake with people not understanding taxes on their IRA or 401k?
Yeah, they don't realize that even if they do retire, they're going to have to pay taxes on their IRA income, their 401k income. It's all taxable. Their Social Security tax, income is taxable.
What form do you get?
So you're gonna get a 1099 basically from them, and it's gonna, instead of a W-2 where you're working now, you're gonna get a 1099 that says, hey, this is all taxable income at the end of the year.
And also we all know with all the federal social programs and after COVID and this infrastructure, we don't think taxes are going to go down.
I think they're going to go up. I've been saying this for 10 years.
And they always go up. Listen, we have passed the $3 trillion mark as the first time for the debt of our country.
So my wife and I were having a conversation the other day because we were talking about all the stuff that's going on in the economy and the world and blah, 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 and especially money and how it affects money. You don't have to be politically one way or the other or incorrect. You can just say, hey, this is affecting me money-wise. And that's the scary part for every middle-class American out there. They want to know, is my money safe? Is my money, am I going to have enough money? I don't know how many times a week we get a question, am I going to have enough money? Mm-hmm. And the only way you're going to know that is if we run real numbers for you. Jenny, I know you get a lot more questions than I do. What was the question about IRA that you had?
Well, another one is, why is naming your trust as a beneficiary on your IRA a big mistake? Yeah,
so here's what happens. A lot of people go out and they'll go, well, I'm seeing my attorney, I'm getting a trust. And they think a trust somehow miraculously gets rid of taxes. It does not. And
that is a big misconception.
It is a big misconception. And number one, what they do is the lawyer will say, put everything you own in your trust. Giant mistake for IRAs. Unless you have an IRA trust set up specifically for your IRA, I would never have your beneficiary be your trust. Why? Trust levels are a corporate level. That means your tax rate started 35% or 30%, whatever the number is, it doesn't matter, 30+%. Individual tax rate started 12%. So if you leave your money to your family, you want to pay 12% or 35%. And your attorney will also get a piece of the action on your IRA. They're going to get a fee, whether it's 1, 2, 3, 4, 5, 6%, whatever it is. So I would never have a trust be my beneficiary on an IRA unless it's sizable amounts and you're doing something different with it, which way beyond the scope of this show.
I think another mistake people do is they take out lump sums from their qualified account, 401k or IRA. I remember you telling me that you had a client whose brother-in-law told him to take their IRA and cash it out and pay off his mortgage.
Yeah, that's another good advice.
Another reason to go to a financial expert.
So the guy was told by his
crazy.
brother-in-law, this is exactly how it happened. He went to his brother-in-law and the brother said, hey, Bob, you retired. You need to pay your house off. This is his great advice. So he goes, really? Well, I don't have the money. He goes, well, you have your 401k, don't you? He goes, yeah.
Oh, that makes my heart
So the guy
break.
cashed in the 401k for like $300,000 or $400,000, went and paid his mortgage off because he listened to his brother-in-law. The next year he gets a big giant tax bill for like $120,000. And how did this help him? It did nothing but hurt the guy. Now he's got problems not with the bank, but he's got problems with the IRS.
And no income stream.
And no income stream for the rest of his life. And he disinherited his wife. Now he's got a house that's paid off, but he's disinheriting his wife. So
That sounds like a happy home.
this is why I always tell people, you need professional advice. I always tell people, you need legal advice, get an attorney. You need financial advice, get a financial planner that knows what they're doing, and an advisor that can help you and advise you, not make decisions based on the income they're going to receive, but helping you.
All right, well, that's my segue to
There
let
you
our
go.
listeners know you've got to tune to the Jupiter Joe Money Show. Joe Thomas, Jenny Thomas, I'm Kathy Green. We've been on the air for over a decade talking to you about your retirement. You have questions? Go to jupiterjoe.com. Make an appointment, 743-0999 at area code 561. Joe or Jenny are locally owned and operated. The Wells Fargo building right here in Palm Beach Gardens. We get people from Jensen Beach, Jupiter to Cuesta, Hope Sound,
Sure.
Boca Raton, wherever you are. If you're listening, either we could talk to you or we could come to you or you can come to us. I want you to know the most important thing about your retirement is getting the correct information. People spend more time, Jenny, and we laugh about this, but it's really not funny, on planning their vacations than they do on their retirement.
That's right.
So it's time for you, if you're a year out from retirement, which tends to be a general timeline, the further out the better. Go online, jupiterjoe.com, make your appointment. Today we're talking about IRAs. We're talking about taxes and how that can eat away at your hard-earned money. And don't you want to keep the money that you work so hard for?
Well, it's funny. I think that what we're seeing more now is a call to action with clients. They're coming in now with a 6-month horizon and a 12-month horizon, maybe 18 months out. It used to be 3 to 5 years. We're dealing with a lot of clients. Now we're dealing with clients that need help right now. And if you, I'll just call out, if somebody needs help with making their 401k decisions, if they need help with their pension decisions or their IRA, give us an opportunity to show you what we know about this stuff. Even if you don't do business with us, it's not going to cost you anything. Jenny has that free, appointment for 30 minutes.
Right.
You can book an appointment with us right online and talk to me directly. And it's funny, when people get me on the phone, they actually hesitate and they go, "Oh, wait a minute, you're Joe?" I go, "Yeah." And they go, "You answer the phone?" I'm like, "Yeah, sometimes I answer the phone. Most of the time I do." Jenny, you have more questions.
Yeah.
This is really good stuff.
So, why is giving control of your money to your son or your daughter a mistake?
Big mistake. So, I had a client this happened to, and she told me, "Hey, Joe," we talk, a lot of times I'll talk to clients and it's planting seeds. I'll say, "Look, Kathy, you need to, make sure that you do this. You make sure you do that." And they'll go, "Okay, I'm gonna," and I'll say, "Look, go to see an attorney to do this. Get your will set up, get your trust set up, blah, blah, blah." And they do. Some of them don't. And one client I went and seen, and I said, "Hey, Jackie, did you take care of that? We talked about this." "Oh yeah, Joe, you don't have to worry about anything. I transferred everything I own to my son's name." I go, "Oh, not a good problem, not a good issue. Not a good decision. Why'd you do that?" She says, "Well, my son is my caregiver. If anything happens, blah, blah, blah." Guess what? 6 months later, he's divorced. Half of the mother's money now is the daughter-in-law, who she loved,
No.
tremendously, tongue in cheek. So never give up control of your money. Do things legally, not because it's easy.
So you have almost like a bullet point list.
Yeah.
Not only if you're looking into an annuity as a financial product for you to keep your money safe, there are other things as you're coming up on retirement, how to turn that 401k into an income stream.
Kathy, the most important thing you can do is figure out how to protect your money now, more than ever, how to get income for the rest of your life if you need it, and third, which I think is more important than anything, where's your money going when you die? Everybody dies.
Yeah.
Now, look, we're in South Florida. I've heard this said before, where, God's waiting room or something like that.
Oh, yeah.
Right?
Clearwater.
Yeah. So, we all are going to go, okay? And you say, well, how does and I hear this all the time, I want my daughter to get my money. I want my son to get them. Well, how do you do that with a 401k? How do you do that with your pension? How do you do that with anything you own unless you take care of it? We talk about that to clients. I don't care what the interest rate is. Interest rates are going to go up and they're going to go down, okay? How do you transfer assets in the most tax-advantage way? Talk to your people about that. Don't talk to me. I already know and I can tell you, okay? But you have to listen. You have to be willing to learn and be willing to make those changes. That's what we do.
And that's what we're talking about. Paying the taxes, yes, but make sure you have the right financial product.
There you go.
That you're not overpaying.
And here's another one. We had a question from a client who emailed us. Is my retirement plan ready for the impact of me or my spouse passing away, and what the reduction in Social Security would mean for the surviving spouse?
Yeah, real important. You need to know, if your spouse is getting $800 a month for their Social Security, and yours is $2,000, what happens to that money? You're going to lose that $800 of income if your wife passes away first.
Yes.
But what if it's vice versa? Then the wife's going to get the $2,000 and the husband is gone.
She absorbs the full benefit.
Right,
once.
but you're still losing that extra money
You are.
because you're only going to get the higher amount, right?
Okay.
So these things are important. Let me tell you something. We could have, most of my interviews with clients are 45 minutes to an hour and 30 minutes. We could go 5 hours if you really wanted to get into detail of everything, but people don't go that exclusive. They're just hoping to get out of there and get it done. But we're going to take our time with you. We're going to show you. We're going to show you why. We're going to show you how. Then it's up to you which ones you decide to do. Any other questions?
I've got a few more.
It is a series of
Here's another
questions, Jenny.
question. Is my money in the right places? Is it diversified properly? And am I taking on more risks than I need to or should?
Yeah, so diversification is so important, and this is so funny because not funny, it's actually not funny, but when clients will text us and say, or email us and say, am I too risky? Well, let me tell you, just by the tell is for me, if you're asking that question, you're 100% too risky.
Okay.
And I know that from common sense. If you're asking you're too risky, your gut instinct is never wrong. Women especially, they don't want to risk any money, and rightfully so. They want to make sure the money's going to be there, guaranteed and secured. That's what we do.
We live longer.
You live longer. That means you got to make sure the money's going to be there. My wife Lynn would be very happy with 3% return. Where I want to take a little bit more gamble and take a little more chance with it. Just the way men and women. We talked about this many times. We've had shows.
Yes.
So yeah, I mean, you got to think about the risk level, and you do have to put your money in different buckets and different places, and that's what I advocate. I don't. When a client comes in with, doesn't matter the amount. Let's just say 100,000. And they say, well, I want to put it all here. I'll say, listen, why don't you put a percentage there where it is, put a percentage here, diversify. The better you are diversified, the less risky your money is.
This used to be a bone of contention with you, Joe, because people used to think they were diversified.
Oh my God.
And you would be exasperated when they came in, and when he broke it down, they're completely at risk in the market.
People come in
but
like
in
this.
their minds.
They come in with their fidelity statement or theirs, and they drop 3 pounds of paperwork, and they go, here, I'm diversified, right? And it's all securities, and they don't understand that every security means risk, whether the risk level is high or low.
But it's so scary because we hear from clients who say, I lost 100,000 or whatever it is because their money's in the market.
On my life, I had a guy this morning tell me he lost $700,000.
Oh.
Now look, he's got money, but that 700 grand, 700 grand. I don't care how much money you have, right?
Yeah.
Losing money is not a good thing. I write in my book about rose-colored glasses. If you want to go through life, and I have these clients, potential clients, come in and say, "Oh, I've done so well in the market." They're wearing these rose-colored glasses. The market goes up and down. People win and people lose in the market. People make money, people lose money in the market. It's the way it is. Nobody makes money all the time in the market.
No.
Well, I think also people who have a 401k or they have a brokerage account, they have, they want to spend these high fees, but that doesn't mean that they're going to get higher returns.
That's perfect. So just because you're paying your broker 2% a year doesn't mean you're going to earn 15 or 20.
You're thinking you got a hot shot here, and that's why you're paying these high fees.
Well, it's just like Fisher.
I'm the man. I'm in the market.
Well, it's just like Fisher Investments. They go, annuities are no good. Fisher Investment. When people say, well, why does Fisher Investments say annuities are no good? They don't sell annuities. They sell securities.
They're advertising a lot lately.
Well, they're
too.
advertising a lot because people are pulling money out of their accounts.
Yeah.
And they're trying to get annuity business, and they're doing it.
And they talk about their lack of fees, blah, 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 blah. That's their big
They're
sell.
in business to make money, just like I am, just like everybody is out there. And some people make money this way, some people make money that way. That's not as important as protecting your money, in my opinion. Good, Jenny. Another question?
Well, I think a lot of people are kind of doing their retirement on their own.
Yes.
And one of the biggest mistakes is that they'll move their IRA or 401k or pension as a rollover themselves, and they don't realize that they get hit with that 20% withholding
Big
tax.
deal. Big deal. So don't go it alone. I always talk about your pension options and your 401k rollover. Don't go it alone. I've had clients say, I'll take care of it. I say, no, don't let me take care of it, please, because they'll get a check sent to them, and then they'll say, hey, here's the check, Joe. Well, you're allowed to do one of those per year, but if you've done another smaller one for $20,000, now you're moving $200,000. The $200,000 is going to become taxable, and they're going to take 20% out of your money.
Timing is critical.
And you got to know. The reason we wrote the book Retirement Know-It-All, so you know about this stuff. I already know about it. It's how to, and I'm not saying that arrogantly. I'm saying you need to know. You need to be a know-it-all about your retirement money today, more than ever before, and I mean that sincerely. We've been doing seminars 15 years, and whenever we talk about this stuff, we always talk about The same subjects. Politics are affecting your money. The market's affecting your money. It's the same stuff. It's just reiterated now.
Well, knowledge truly is power, and I think that's what we try and do each and every week, is to discuss different topics, bring it to light, give you something to think about, and give you the opportunity to go online to jupiterjoe.com, check out our past podcasts, check out our past topics, and through that, to find, like, I think when we were speaking off mic before the show began, the Roth IRA. So if your money is in a 401k or an IRA, you're going to be taxed. There is a fee to transfer the money, but you can spread that out over time.
Yeah, you're going to be taxed.
We've loved the Roth IRA forever.
Well, I'd be worried if my parents had an IRA or something that goes to me, and then I'm going to be owing this huge tax bill.
Yeah. You're going to pay tax. Well, here's what happens.
They're kicking the can down the line, right?
Yeah,
a lot of
we love you, Jen, but here you go.
Yeah.
And a lot of tax laws are changing, and people don't realize that if you leave your money that's in an IRA to a non-spouse, your daughter or your son or your daughter has two choices. Either they take it lump sum and they pay tax immediately on the whole amount. So if they get your IRA or 401k that's $400,000,
the government snatches the money
they're
for you
going to
and
take
get your hand on it.
40% is gone.
Jeez.
Or you can spread it out over 10 years.
Okay.
So I tell clients, spread it out over 10 years for your daughter or your son, but they have to know about it.
And how about tax benefits of an annuity?
They're tax deferred if it's a non-qualified regular cash account. We go through all that with somebody, but it's
Okay.
This stuff is complicated, and we try to make it as easy as possible.
Another complicated section, I think, we get a lot of clients who ask us, or potential clients ask us about RMDs.
Oh yeah,
Required minimum distributions.
correct.
So how do you eliminate RMDs?
So that's a great question, because there are some clients out there, we were talking about earlier about clients that don't need the income.
Uh-huh.
If you don't need your income and you're getting a required minimum distribution, you can give it away. You can give it to your synagogue. You can give it to your church. You can give it to any qualified.
It's a tax, not-for-profit tax benefit.
You're not going to be taxed on the money. You can give it away. And the government just changed that law back. They were going to do away with it. Then they did it back from the date that I just last did the show. You can do that. Or you can use that money to a higher level. Take your RMD, if you're healthy enough, buy life insurance, and let the life insurance go to your family tax-free instead of the IRA being taxable.
Which is really the cherry on top of
You're supersizing your IRA or your 401k.
Let's talk about the life insurance, though. Health, do you have to take a physical exam?
Yeah, there's going to be an exam. You're going to have to get qualified for it. And we used to, look, I've done a lot of insurance planning for clients for 30 years, right? And the problem with it is their brothers and their sisters and their cousins and everybody told them how bad life insurance is. Well, let me tell you something. Nothing beats life insurance.
It's been around for a long time for a reason.
The two biggest tax benefits in the tax code, the whole tax code, okay, is life insurance number one and Roth IRA number two. There's nothing bigger than that, because nothing beats tax-free.
Nothing.
Period. And especially
hands down.
when your kid gets a check for $1 million, 100% tax-free. That's a big deal.
Mm-hmm.
Seriously.
You can't even buy gum without being taxed.
Exactly.
Right.
Exactly. But this is what we talk about with our clients. And guess what? You don't have to pay me a fee. The company pays me a fee if and when you decide to do business with me.
All right, go online to jupiterjoe.com. Pick up the phone, 561-743-0999. Get a copy of Joe's book, The Retirement Know-It-All. Get a copy of the ebook. Get a free appointment. I don't know what you're waiting for. If you're a year out, 18 months out, 6 months away, now's the time for you to talk to a professional who's been doing good business in Palm Beach County for over 20 years. Joe, we put out this effort. We research subjects and come to our listeners each and every week for a reason.
Yeah.
People want to know this. Jenny, you have some great questions. You're sort of their first point of contact when people call you and Joe because they're looking to set up appointments, so you get all the good questions.
I love the questions, but it helps me learn at the same time.
It does. I like human. Look, we used to do the seminars, and Kathy could stand up there for days talking, and I can as well. But I love the Q&A because it just turns. It's the best part of the business. I want to let people know what I know, and I want to help people. You have to have the heart of a teacher. If you're a good advisor, you have to have the heart of a teacher. You have to say, I'm willing to go the extra mile. I talk to clients all day long, or potential clients. They don't do any business with me, and I'm glad to answer questions for them. I love it. Go ahead, Jenny.
So here's another question. What might long-term care cost me down the road? and how could I handle a potentially $10,000 per month extra bill for a couple years if I need to?
This is a huge problem for every American that's over 65. If you get sick, is your money going to be gone? The average person stays in a nursing home for 3 years. And if you, God willingly, come out, you either die or you don't come out, and I'm going to give you the facts, your money's gone. You've given all your money to the state, and you're not getting that back. If you've given anybody a gift in the last 5 years, if you gave your son a gift for $100 as a birthday gift, and you go to a state facility, that $100 is going to go back to the state. You can't give your money away. Yes. So you have to understand long-term care is a huge issue. We don't promote it as much, but I can tell you that our annuity products that we offer have an income doubler that can help support you with long-term care needs. And guess what? There's no examination, and the fees for it are usually very low, about 1% a year.
I think that's a huge peace of mind. They say people spend over half of their money in the last 3 months of their lives.
I believe that, yeah. And what happens if you go in for a month and you pass away, and you've given all that, you've qualified now for Medicaid, and you die? The money's gone. They're not going to go, oh, here you go, kids, here's your money back.
No.
They don't do that. Just the way it is.
It doesn't make anyone real happy. That's a really good question.
I think the thing we bring to the table here, Kathy, is explaining things that other people don't. Pension options. Why, when you make a pension option, it's irrevocable. You can't. There's no do-overs.
There's no going back.
No, we want to help clients learn this stuff, and we want to not charge you a fee for it.
And these are good common sense questions and answers that you should have a burning quest to find this out, because this directly affects your quality of life when you retire.
So we're not the only people out there that are selling annuities and offer clients annuities, but there's one thing we do differently. We don't talk rates as much as, we're not selling products. We're helping clients, we're educating them, we're informing them. If we do that, we make money. And I'm just putting it out there because this is about helping people. It's that simple.
We have a lot of baby boomers as our clients, and they're the first. They're women who went to work. They might be a single mom. So what have you found where you can help women who have a career and are trying to save for retirement?
It's extremely hard, and we've made a touch on this a couple times. My mom died when I was my dad died when I was 21, and my mom was 61, and I had to do all the arrangements, funeral arrangements, and everything. And I couldn't respect women more than what my mother went through. When I was 21 years of age, I dealt with this with my own mother. And I respect, or kids, and 4 kids, right? And I respect this. And how do you get money? How do you get income? I had to help her do this stuff. So I've always felt that women have it harder than men in many, many respects, especially with women. You've gone through this. I'm speaking from
I'm
the
a
heart.
single mom, and women still don't make as much money as men.
And how do you're always worried, right? And you're always
and if you had a double income, what you could be saving, you're spending.
There you go.
Yeah.
So when it comes time for retirement, you spent all your money and energy raising your child and yourself.
Right. So women have it tough, and I try to educate them a lot.
We've done live women's seminar.
Yeah, we have. Yeah, we've done shows just for women. And I
Very well attended, I might add.
That's true. That's true. So I think the women thing, you have to educate yourself. And the woman wants safety. They want safety. They don't want to lose any money. They want a guaranteed return. They want to know their money's going to be there. And that's what we provide. If there's one thing we provide is the safety level.
And women are more vulnerable, so all the more reason to go online to jupiterjoe.com, sit down with Joe and Jenny, and find out the facts before you make a decision that could really affect the quality of your life.
Yeah, if you have a big decision coming up with your pension, your 401k, a rollover, something that you really don't understand, give us a call. It doesn't cost anything.
And we've used this analogy before. If you're going to have a major operation, you're probably going to get more than one medical opinion.
I hope so.
The same applies for your retirement.
Correct.
Go ahead, reach out, get a copy of the book, The Retirement Know-It-All. Joe, you wrote this book and then you revised it.
Yeah, we've revised it. We're still doing it. Jenny and I are talking about how to even improve it further. We're probably going to go to the next level. We're going to supersize it.
Well, my favorite parts are the know-it-all tips. There's just some really good, no-nos and to avoid some things.
Well, it's funny. I have a section in here about getting a second opinion, what a second opinion means. I'm not going to bore you to death. And one of the sections I say, look, get a second opinion, get a third opinion, get a fourth opinion. And I had a guy come in. He said, look, I actually did that. I came back to you. Jenny keeps track of who comes back, and I actually have people that come back. They'll come in, they'll get the advice, They'll get the book, they'll get information, and then they come back 6 months later, 3 months later, say, yeah, I went to somebody else. They didn't help me like you did. They didn't answer the questions. I have people that tell me, we have one lady who told us that her financial guy fired the client. I was like, literally, I said, the guy must be nuts. I mean, how do you fire your client? I mean, that's horrible. But there's some crazy stuff out there, Gabby.
Yeah, and most of our clients, I mean, they're 55 to 65, they're in that range, they're working, so. Yeah.
You all make it time efficient too.
We do. How are we doing on time, Kathy?
Well, right now we're going to go ahead and remind our listeners to go online to jupiterjoe.com. Joe Thomas and Jenny Thomas are located in the Wells Fargo building right off PGA Boulevard. Joe's the author of a book, The Retirement Know-It-All. Get your free copy today. Get your no-cost consultation. Find out if an annuity is the right way for you. Find out about your pension. If you have a 401k at an old job, well, it shouldn't be there. Joe could do the paperwork at no cost to you to transfer that 401k. There are just a lot of topics. Go check out our podcast. All of these things that we discuss. Jenny, you get all the questions. Joe, you and Jenny now working in a partnership, locally owned and operated. This isn't a large corporation. You're not going to fall between the cracks.
No.
I think people want personalized attention. I want to know that you're paying attention to my retirement.
People want answers, Kathy.
People do want answers.
They want answers. Call anybody today. And I'm being honest here. Call anybody, any large company, any of your financial companies. First of all, it's hard to get through to them. Second of all, once you get through, do you get somebody that
Are you getting the assistant or the main guy?
Well, that, and are you in another country? And I'm not being political here. I'm just saying sometimes I'm on the phone. I can't understand the person. So listen,
it's frustrating.
Can you transfer me to somebody I can speak to, get to answer my questions? And I mean that sincerely.